Hello, hello. How is everybody? I hope you're doing great. Welcome back, everybody. I am your host, Munther Marji, with FX Educast and QTime FX. We are here for another day to look at the market to find the best opportunities that we can trade for the day and to help you understand the technical picture of the instruments that you are interested in. So we are extremely happy to have you here. Everybody who is right now with us, thank you very much for being here. I really hope that you will, first of all, enjoy and then benefit from attending this trading session. So, let me remind you that this free webinar is sponsored by QTime FX, our favorite Forex broker. The Forex broker who was awarded the prize for the lowest Forex spread broker of 2018. Imagine yourself trading with only 4/10 of a pip on the euro dollar and the dollar yen. I'm sure you will love that. And not only that, it is a very tight spread with no commission whatsoever, which is amazing. And if that was not enough for you, we have a bonus of $500, withdrawable bonus of $500. So if you want to open your real account with us and join us in these trading sessions where we tell you about the best opportunities in the market, and if you want to follow these recommendations on a real account, not a demo account, then come open your account with us and enjoy all of these benefits, very tight spreads, zero commission, and a very generous bonus. So thank you for being here. And before we start, of course, we have to talk about what happened last night. I'm not talking about Lazio game. That was a very good game. That was an amazing game. I was very happy. It's my favorite team in the world. And what about that last goal? Did you see that? If you're a football fan, I'm sure you would love to see goals like this one. It was straight from the corner into the goal. Whoa, what a goal. And my team won 4-0, so that's why I have a big smile on my face this morning. But I'm not talking about this. I enjoyed the game very much, but before the game started, a couple of hours before that, to be specific, exactly 2 hours before that, we had the decision of the Fed. After a 2-day meeting, the Fed decided to go on with cutting rates for a third time this year. And to some people that was a surprise, to some people that was expected. So it depends on how you were expecting things to go. But the bottom line is that we have a third rate cut on the dollar during this year, and we are approaching, of course, the end of the year, and we have 3 rate cuts so far. I think we still have one last meeting in December for the current year before we switch to the meeting schedule of 2020. And of course, next year we're going to have elections. Usually the Fed tries not to interfere with elections by having radical changes in the monetary policy in the year of the election, or at least around the time of the elections. So presidential election next year, that's why a lot of analysts now do not expect the Fed to do much next year, and they are focusing on what are they going to do late this year and early next year, and then that's it. It should be on pause, probably. This is what a lot of people expect. And what do we have up until now? We have 3 rate cuts. One on July 31st, one on September 18th, and the third one was yesterday, October 30th. So with these rate cuts, of course, the normal thing, having other things not affecting the situation, the normal thing is when you cut a rate on a currency, it should fall. It's less attractive for investors because it pays less interest. Very simple logic. And that can be extremely helpful for us, for our bullish long-term euro dollar stance that we are, holding on to very strongly, especially after what happened yesterday. If you remember, yesterday we talked about 1120, 1160. It was 1120 a couple of days ago, and then yesterday it was 1116. That was the top of the wedge formation. And as you can see, if you have a price screen before you, we are 50 pips above that level. And that is big news for you, Euro bulls. I have big news for you today. So let us switch to that analysis. Let me switch to my analysis screen, and then we'll start talking about, of course, first of all, the euro. All right. So, no, I'm not talking about the Aussie. I'm not talking about the yen. I want to start here. Okay. All right, guys. So this is what happened yesterday. I want to take it down to the intraday charts to show you what happened. Okay, when the rate cut was announced, of course, the price dropped a little bit, and during the press conference for Mr. Powell, we saw the price dropping, and then quickly changing direction. Let me go one step more to the downside. This is when let me go. Yeah, this is when the decision was announced. Not a lot of action, but then when the press conference started, the euro came under pressure for 10-15 minutes, and then it started rising. If you notice, even with the press conference, even with such a giant thing on the agenda like the Fed meeting, we did not break our beloved support 1063 to 1086, even with the Fed there. So this shows you that this was a really, really important and strong support area, and it also shows you that the euro is moving to the upside. Why? Because we are, even when there are important events and things happening in the market, we are still finding support where we should. And we found support for, I don't know, I think it was a fourth time inside this area. Yesterday's low, the intraday low seen after the Fed was 1079. Also inside the area that we have been talking about all this week, 1063 to 1086. 79 is inside that area. And of course, after that, as you can see, the price rose sharply, and overnight we have reached levels not seen for months. 1170, I think 70 or 71 is the high. It is 70.6. This is the highest price seen after the Fed, and we need to focus now on the level that stopped everything a couple of weeks ago. You remember, a couple of weeks ago, it was Friday, I think the 18th of the month, and the price rose for 3 days or 4 days straight, until the last minute of the week, reaching 1183. Okay, so 1183 is now the resistance to watch. And as you can see, of course, we are extremely close to 1183. Now, I want you to remember what we talked about yesterday, the day before, when we talked about the euro. Of course, we were bullish. We are still bullish, and we talked about the top of the wedge formation. That was something that I wanted you to keep your eye on. I said that yes, you should keep your eye on the top of the formation, because when a formation is there on the chart, it is not certain until there's a break in the direction that this formation is pointing to. We had a bullish wedge formation, which means that we are or we were expecting the price to move higher, of course, and the top of that wedge formation was running at 1116 yesterday. That's why we said that 1116 is our initial resistance for the day, and that is why the fact that we are trading above 1116 by this much, we reached 1171, that means that the bulls are now in a great position to capitalize on the recent moves, on the move seen yesterday, and on closing the day above the top of the wedge formation. For this, I would need to switch to the daily chart. And remember what I told you yesterday. Do you remember? I talked about this attempt to break here, and I said that when you have an attempt to break above the top of the formation like this one, and then the price goes back into the formation and then tries again and successfully closes above the border of the formation, then usually, from my own experience, this is not something I read anywhere, but I noticed this happening in the market time after time. The second attempt to break is usually successful, and it's usually strong, and that is why I expect the euro to continue moving to the upside. Yes, 1170 to some people, yeah, 1170, well, what do you think about shorting the euro here? Well, I don't think that's a good idea. As you can see, we are trading above, well above the top of the wedge formation. Guys, this is a trend line that has been pushing the euro lower since February of last year. How many months is that? I think, what, 21 months, okay? Very close to 2 years. And now we are trading above it. We have tried to break it earlier this month. Then again, we retreated. And now, for the second time, we are trading above it. There is absolutely no reason to believe that the euro will fall from these levels. On the chart, you look on the charts, you find zero reason to believe that this is an instrument that is expected to fall. So I'm expecting the euro to continue moving higher. Of course, my target is much larger than 100 or 150 pips on the long run, but of course for the short run, whenever I get myself some good profit on a long euro position, of course I'm willing to close it and then look for another entry. So with this daily close, look at this daily close. With this daily close above the top of the formation, as you can see, it's not very close to it. Sometimes we close just above it, and that's the next day things start to deteriorate, the price starts falling, but not when you close above the top of the formation by this much. So this distance between this trend line and the close of the day that we saw yesterday is bullish. Of course it is bullish. And as you can see, when we started trading for today, we started at the close and we did not drop not one pip below the open. So the open is the low here, okay? Or maybe 0.2 of a pip, The open was 52.2 and the low is 52. So we are obviously trying to move higher. Now we have this resistance in our way, and we need to get rid of it. This is the high seen on October 18th. It was the highest price for 2 months, and now we are approaching that. And of course, when we start trading above it, it's going to be very close to a 3-month high, and that is, of course, leaves us with this as an initial resistance, 1183. But it's not really technically important, It's not a retracement level, it's not a trend line, it's not a support or resistance that has been keeping the price down for time after time after time. It is, of course, it's a level that we need to pay attention to, but it's not a key level. In my own opinion, what our focus should be on is the retracement levels for the drop from June top. The top seen late in June was just above 114, and of course now we are trading above the 50% retracement for that move. I don't want to see the 50%, I want to see 61.8, 78.6, 88.6, and my level 71.4. Okay, so these are the retracement levels that we need to care about as we move higher. Do you expect to move higher? Of course we do. Does that mean, the way I'm talking about it, I'm very excited about it, of course. I have been expecting this for a while. Since it was 109, I said this thing is going up. And now it's 111, approaching 112, hopefully, and we're going to see this before the weekend. Of course, we have the NFP tomorrow, the monthly report, monthly labor report coming from the United States, and it's going to be important, of course, because after 3 rate cuts, now we need to watch all the economic figures coming from the United States in order to estimate if there will be another rate cut, a 4th rate cut on the last meeting of the year, or not. So these retracements now. 1209, we talked about this as a potential target for any long position that we have been holding for the past few days. And then we have 1260, keep these numbers up here, 1209, 1260, we have 1298 and 1351. These are the resistance levels that you need to keep your eye on as we move higher, okay? So I really hope we break above 1183, the sooner the better, and I really hope that that would lead. Of course, 1209 is very close to 1183, but I really hope that we will start targeting higher levels and very soon. Now, even with all these reasons to believe that the euro is going up, of course, this is a market and it can go down. So even after such a wonderful move up from our support area, the euro could start falling. Now, it is extremely hard to use recent lows to draw a trend line that is close to the price action that we are seeing right now. So what we need to do in these cases, what I do is, of course, I will try to draw some trend lines somehow, but of course, I will also use retracement levels. In my own opinion, connecting these intraday highs, or actually they are daily highs. Yes, daily high for the 28th and 29th of the month, earlier this week, and then again the 30th before the Fed, of course. Let's call it the European session high yesterday, and Tuesday's high, Monday's high. If you connect them, you get yourself a good trend line. This trend line is currently running in the 30s. Of course, it's a rising trend line. It's going to rise a pip or so every hour. So 30s, maybe by the American session, is going to be in the 40s. And in my own opinion, this is a level that we need to pay attention to. Now let me calculate the retracement levels for the move from yesterday's Fed low. I use this term a lot: Fed low, Fed high, ECB low, ECB high. It means the low or the high that happened during the announcement of the decision or during the press conference. So yesterday, during the Fed thing, between the announcement of the decision and the press conference, the lowest price was 1079. I will calculate the retracements from 1079 to 1171. That is almost 92 pips, about 92 pips to the upside, and the retracement levels for this move. Of course, they are going to be very close to each other, which unfortunately limits their benefit to us as analysts. But nevertheless, we really want to know where these levels are, even if they were very close to each other. And what a surprise! The first level is at 1136. We were just talking about the 30s. we said that 30s is where the support that we need to care about is. And as you can see, the retracement level 38.2 and the rising trend line that connects previous daily highs from this week are extremely close to each other, maybe a pip or so away from a pip or two, something like that. So this is why 1136 is going to be an important support for the day. 1136. This is my first support. Now 1136 is a support and 1183 is a resistance, and with that I think we can start placing our orders. I want to buy the euro if it breaks 1183, and I want to buy the euro if it drops to the 30s. In both cases I want to buy. Why is that? You know, lately I'm sure you have noticed that when I find a support and resistance, I place a buy stop above the resistance and a sell stop above the below the support. So if the resistance breaks to the upside, I want to get in on the long side of the market. If the support breaks to the downside, I want to get in on the short side of the market. But today I'm not doing that. I'm doing something different. Why is that? Of course, it is because of yesterday's very bullish daily close above the top of the wedge formation. And that is why I would really need strong bearish action in order to convince myself that, yeah, selling the euro makes sense. It does not make sense under, of course, the current technical outlook. So even if we drop to the 30s, that I view that as a buying opportunity. And if we start trading above 1183, I view that as a buying opportunity. So I'm going to place two buy orders on the euro, one stop and one limit. Let's start with the stop one. If we start trading above 1183, let's say 10 pips, that means 1193, I want to be in on the euro. I want to be euro long. I want to buy the euro. Okay, and the stop should be below 1136. Below 1136, the problem is we do have very close levels to each other. So 25 and 14, 11, 14, all of them can save the day. So I'm not gonna put my stop below the 1136 here. I'm gonna place it just a little bit below 1114, and that leaves me with 1104. I know it's a bit it's around 90 pips. Usually we do something between 60 and 70, but it's okay. It's okay to push the stop 10, 20 pips more than what you are used to from time to time when you really believe in the market direction. Now, I'm going to place two orders, guys, but if you are going to follow my recommendation for the day, what I want you to do is this. I want you to follow the market, and once one of them is hit, I want you to cancel the other. Why is that? It's not because of technical analysis, but it's because of risk management. I don't want to have a large number of positions, even if I believe in the direction of the market. I want to keep my risk limited. If I'm wrong, I don't want to pay 15% of my account. I want to pay 5%, 3% of my account, something like that. Okay, so that's why I don't want to have two stop loss orders and see them hit. I don't want to see two orders to get in, and then I will be worrying about what if both stops are hit. I want to have €1 position, and that's why if you want to follow my recommendation for the day, you need to watch the market, and if one of them is hit, immediately you need to cancel the other. So the first is at 1193 with a stop at 1104. That means 90 pips. If we go back to this chart, we can see that the minimum target that we can think of is 1260, but I'm going for more than that. Of course, this is an area that is not a retracement level, but it's close to the 78.6. We have seen daily highs in the 80s here for a number of days, 86 here, 84 here, 81 here, and 82 here. So the 80s is obviously a resistance, and that's why I'm going to place my stop, sorry, my limit at 1286, the top of this area. So the stop and the limit are almost the same size, 1-to-1 risk to reward ratio. It's not what you like, guys, I know, but this is what the technical analysis is telling me, and I'm gonna stick to it. Okay, guys, so we get in at, if the price rises to 1193, our stop is 1104, and our limit is 1286. And I place. Now, another order that I want to place is a buy limit. If the price drops enough to give me a good opportunity to go long, what do? If we got to 36, I want to be in. We talked about 1136, and I want to be in the market. Now, this, of course, gives me the chance to achieve more profit if we start trading above 112. And that is a good thing, of course. I like that. I'm sure you all agree with me that everybody wants to buy on lower levels, not on a high level. So of course, we prefer to have our limit buy at 1136 hit, not our stop buy at 1193. Now, what about my support and resistance that I can use to place stop loss order and take profit? Remember, we have been talking about this support area 1063 to 1086 for a long time, and we want to continue holding on to that area because it is an important area. So I want to place my stop below this area. Okay, it was the bottom of the area is 1063, so 1053, maybe 43 would be okay. And that again, as you can see, the stop is a little bit larger than what we are used to, but it's fine to push it just a little bit, 10-20 pips from time to time when you see enough reason to do so. But of course, you need, under any circumstance, you need to keep your risk under control. Never trade without having your risk completely under control. Okay, guys? So 1136 is our entry, 1043 is our stop. What about the limit? Now, I need at least 100 pips for this trade. That is what I really believe that it can achieve, and that is why I am going to target at least 1236. I don't want to target anything below that. And as you can see on this chart, we do have a retracement level at 1260. Okay, guys, so 1260 is going to be our limit for this trade. I think it makes a very good limit, and that's why I'm going to place my limit at 1260. This makes a very good trade. If you take a look at the stop, you can see that this stop is how much, guys? 93 pips, and our limit is 124. So the limit is a little bit more than the stop, which of course is good from a risk management point of view. From a risk reward point of view, these are good levels to place your stop and limit at. So because I really think that these levels are good and they make so much sense to me, I'm going to place this order. So now we do have 2 orders to buy the euro. Okay, guys? Again, I want to take a look with you on the long-term analysis. I want to remind you why I am so excited about the euro. I am really excited about the euro for today because we are trading above the top of the wedge formation. Now the measured move, if you know what is a measured move, if you know your technical analysis, you know that we can calculate the target for this formation from the moves inside the formation itself. Some people use the first move, some people use the largest move, which in my own opinion makes more sense. So the move from here to here or to here, it will be a little bit different, of course, but not too much, is the size of a move that we should expect from breaking this formation to the upside. And the move from these levels around 25.50s to around 13, you know, this low is, I think it was 13.01. As you can see, it's 13.01 from 12.56, sorry, 25.56 to 13.01. The size of the move is around 1,250 pips. So I will be expecting the euro to move 1,250 pips from the breaking point, which was around 11.20 at the time of the break. 11.20, yeah, when you add 1,250 pips to that, you get yourself at 23.70. 23.70. I know for some people that is maybe hard to believe, but yeah, it's around here. This is the target for this break. It is around here, guys. So believe it or not, this is what I'm expecting. I'm not aiming for 10 or 50 or 100 pips. I am not doing that. What I think the euro will do on the long term is that it will be moving to the upside in a very strong way. But of course, this cannot happen overnight. It's not going to happen in a month. We are talking about long-term analysis, guys. And that is why we need to give this analysis some time. We need to wait for it. But this is the destination that we are going to. Keep this in mind. Forget about shorting the euro. This is my own advice, my own recommendation. Unless we, of course, we're going to meet every day and we're going to update this. For the time being, under the current technical outlook, you can forget about shorting the euro. And if you want to make money in this market, you need to look for levels to buy the euro, not short the euro. Okay? However, even with this very fantastic limit, you can call me greedy. I know you will, but I'm going to say what I have to say. I really believe that from my own experience, most of the time, when a wedge is broken, the price can go beyond the highest price inside the wedge, and this is 25.56 here, the annual high for 2018. So 23.70 makes a fantastic target. Of course it is. It's a huge target. Nobody can say something about that. But in my own opinion, we can still push it beyond that. We can still push to levels that are not below this top here, the 2018 high. So yes, this is a great target, but my targets should be above 25.56. And that's why in the past couple of months, my analysis to my clients on my daily report used 126 as a long-term target for the euro. I want and I expect and I really believe that the euro will be visiting 126 on the long run. So this is it, guys. This is what I really believe is going to happen. Yesterday's daily close was something really exciting from a technical point of view. The Fed helped us. It helped our view. And, you know, some people, it's a philosophical question, you know, is it the events that move the market or the market that moves the event? Of course, or creates the events. Of course, studies have been done, and I'm sure some of you are aware of it, that the market moves ahead of the economy. This is something that has been established through scientific research. At least we are talking about the American stock market. It moves before the American economy with a lead of about 6 months. This has been established through research. It's not something that some people think is. No. There has been enough research, and this has been established. Okay, so the market moves before the economy does, and that gives you or leaves us with the question: are we trading at these levels because of the Fed yesterday, or were we going to trade at these levels with or without the Fed? We are above the top of the wedge formation. Great. Now, can we go on? The technicals say yes, we can, and yes, we will, and that gets me very excited. But is it the Fed that moved us up here, or is it just the market moving? Even if we did not have the Fed, maybe it would have taken a little bit longer of a time, but eventually the technical analysis was pointing to the upside, and the market is currently moving to the upside. Of course, we did not move 200 pips to the upside yesterday. Still, I am very excited about it because it's not about 200 or 50 pips. It's about what does this move mean from a technical point of view. And from a technical point of view, of course, what we have here is a break above at the top of a long-term formation that is expected to generate a move of more than 1,000 pips above current level. This is exciting, don't you think, guys? Yeah, I hope you are as excited as me. And I'm telling you, it's not only because my team won big last night. It is that's why I'm wearing this shirt today. I'm wearing it all day. When at work, I'm wearing it. When I go see friends or family, I will point to this logo here. Yeah, did you see what we have done last night? And I'm going to tease everybody about it, especially my friends who like football but like other clubs. Rui, good morning, buddy. Thank you for being here. Ram Heinz, good day to you too. And please let me know, am I saying it right? Ram Heinz? Is that correct? Julie, hi Julie. Thank you for being here for another day. And okay, guys, so now we do have the orders for the euro. I'm gonna place them on the chart. Please, if you have any requests to analyze any instrument, just shoot. Feel free to do so. I'm here. I'm yours for 3 hours every day, and I'm willing to analyze anything that you want me to look at. Currencies, commodities, stocks, anything that appears on my chart, anything that I can find on my charting software or this website that I'm using, I am willing to analyze. Okay, guys? So before we take our first break, I want to wrap things up. I want to summarize what we think about the euro, and I'm going to leave the orders here on the chart for you to see. We have placed 2 orders, and they are both buy. Yeah, it's not a buy-sell situation today. We are above the top of a formation. There is no reason to go short at current levels. Of course, this can change. If it does, it's going to be a surprise to me personally, and I'm sure to a lot of other analysts. On the other hand, a lot of traders or analysts are now expecting the euro to fall. So it's always this fight between, it's not an actual fight, but it's some kind of a game. Let's call it a game, a match between people who expect the market to go up and people who expect the market to go down. So this can change. Of course, this can change. That's why we have sessions every day. Tomorrow morning, we'll see what happens. And tomorrow, of course, we have the NFP, non-farm payrolls. And unfortunately, it's not going to be close to the time of the webinar. It's going to be 4.5 hours after the end of tomorrow's webinar. So we cannot talk about it until Monday. We're going to talk about it on Monday, of course. and hopefully it will give another push to the bullish expectations on the euro dollar, just like the Fed did last night. So buy our orders. We had a buy stop at 11.93, and we had a stop and a limit, and we had another buy, if you remember, at 11.36, and we had a stop and a limit, 11.04. Do you remember these numbers? Do you remember these numbers? I hope you do. There was 10.43, and the limit, of course, the limit, and to me, sticking to the stop is more important than sticking to the limit, because you need to control your risk. If you want to be a little bit greedy, more than what our limits are, it's okay. But of course, you need to keep an eye on your trade. But if we place a stop at 70 or 80 pips, don't say to yourself, well, I'm not going to use that. I'm going to use 150 pips of stop. And then if the stop hits, we will be losing only 70 or 80 pips. You will be losing 150 pips, which is not a good situation to be in, of course. And after a week, you will come, well, I lost 150 pips. And other traders who were watching the webinar said, when did you do that? Well, on the euro long position, but the stop was 75. Well, I did not use the stop they told me to use. It happens sometimes. Some traders and investors come to me and say this, the market is crashing 200 pips, we are out at 60 or 70 pips of loss, and they have 160 or 170 pips of loss. What happened? Well, I did not use your stop. So you used my entry point, but you did not use my stop. That does not make any kind of sense. Okay? So the limit here, I'm trying to remember. I like remembering numbers. The limit here was 12.60, and here I think, yes, it was 12.86. So these are the orders for now, guys. I'm going to keep them here. What if I colored them for you? How do you like that? It's better. What if I make them a little bit larger? Yes, I want to keep these numbers in front of you. So these are the orders that I recommend for the euro today. As you can see, I do not have a euro short order for the day, and if you have been following, you will understand why. So with this, of course, we come to our first break. We are going to take a break every hour or so. Euro always consumes the whole hour, as you can see today and the previous days. And after 7 minutes now, it's going to be the beginning of the next hour. I'm going to be here. So a short break, guys. Enjoy your time. Get yourself something to drink and think about what is it that you want me to analyze, okay? I am taking your requests. You can ask me to analyze anything that you want, and I will, okay? For the time being, thank you very much, QTime FX, for this generous sponsorship. Guys, show our favorite forex broker some love, because they are offering you fantastic spreads, zero commission, and a wonderful bonus of $500. And let me say, it is a withdrawable bonus. You know, it's not just a trading credit that you will never see. It is withdrawable. Okay, guys, you can withdraw these funds. Come open your account with us. Contact us at fx_educast via Telegram, and we'll be happy to help you every step of the way. So we'll take a short break, guys, and on the top of the hour, we'll be back to analyze more instruments. Have a great break, guys, and see you very, very shortly. All right, guys, after this short break, we are back. Welcome, everybody. How are you doing? I hope you used this break to get something to drink, to think about what you want me. And I see requests. That's great. That is great. I can see your requests right now. Let me again remind you that this webinar is sponsored by QTime FX, our favorite forex broker. Fantastic spreads, amazing fact that you pay no commission on this very low spread that you are trading with, and above all, a bonus of $500. So contact us and let's open that account for you. Now, let's go back to our analysis session. Okay, the first request is for the dollar yen, and it comes from our good friend Rui. Okay, so yesterday we were talking about it. We talked about it a lot, and we talked about the importance of the 930s. Remember, we did talk about it. We said that it's not only the 61.8 Fibonacci level in the 30s, but also we have this important daily high, which so the dollar yen completely collapses after that, after reaching the 930s to levels below 105. It was an amazing drop. So we have more than one reason to believe that the 930s is an important resistance area, and as you can see, overnight or during the past 12 hours, we have seen a high of 109.29. How about that for a good analysis, guys? What do you think? Well, obviously, the 30s showed themselves up one more time on the chart with this high that we have seen here. I just want to go to the hourly chart and see when did this happen. Was it on the Fed? And yes, it was on the Fed. This is the hour where the Fed announced the rate cut, and 30 minutes later, of course, the press conference. And during that time, we rose to almost to the 930s. We got a high of 29, extremely close to the 30s we were talking about. And then we dropped, up until now, we have dropped almost 70 pips from there. So the thing is, with the euro where it is, if there's nothing really special and strong affecting the dollar yen or the yen itself, the fact that the dollar is expected to show weakness in front of the euro means that this is going to be the case against most majors, because the euro is the most important counterpart for the dollar in the forex market. And when the dollar or the euro, or if one of them starts achieving gains against the other, that usually that is the case against most of the other majors, not all, but most. So that is why we do not expect the yen to continue moving higher. It does not make a lot of sense. And topping very close to the 30s, then dropping 70 pips goes along very well with that. I want to switch to the daily chart. As you can see, this high here and this high here are extremely close to each other, and both of them are extremely close to the Fibonacci 61.8 for the medium term. It's calculated for the move from April high to August low. And August low, I think it was the lowest price for quite a while. Yes, it was. It actually was for a long while. Look at this. The last time we have traded at this low was in 2016. So we're talking about 3-year low. This is the 3-year low seen in August. It is 104.45 and a half. Okay, so what's next? This is the most important thing. In my own opinion, without breaking the 109.30s in a clean and clear way, the dollar has absolutely no chance in front of the yen. Unless we do break above this level, it is going to be very hard for the euro, for the dollar. I'm still thinking about the euro, guys. I have big plans for the euro, and if it moves in the direction I am expecting, I'm going to be making a small fortune. Okay, so let's try to draw trend lines and see if they make sense. I like this trend line. This, you know, this second trend line is only touched here and here, and the price is not trading very close to it. But here we do have a better looking trend line. We have two touches here, very close to it, 2 times here, and an attempt to break it before we close below it. And this is what can be viewed as a Pinocchio bar, if you know your bar patterns. This is a Pinocchio bar. Of course, usually the Pinocchio bar is identified using horizontal support and resistance, but of course that does not have to be the case. When you have a trend line, of course that is a Pinocchio bar. When you have a long nose above this trend line or above horizontal resistance, of course, it can happen below a support as well, and then we close well below the trend line, that is an indication of weakness. And if you don't want to use bars for your analysis, you want to use candles, this is also a shooting star. It looks a lot like a shooting star. For a shooting star, I would like to see the lower shadow smaller than it is, but in all other requirements, I find it to be meeting the requirements very, very well. We have reached a high that this trend has not reached before. We have a long upper shadow, a small body, and of course it came after a rising move. So all the requirements that I need for the shooting star are there. Yesterday daily candle was a shooting star, and you see guys, this is what I tell you. I always tell you to always check the daily chart. A lot of traders, they use the hourly. That's fantastic. They say to themselves, well, I'm not a long-term trader. Why would I be needing to take a look at the daily chart? Well, it is exactly for this reason. You can find patterns, bar patterns or candle patterns that can really help you estimate the chances of the market moving in one direction or the other. And in our case here, as you can see, we do have a Pinocchio bar and a shooting star, which of course help us estimate the chances of which direction that we prefer for today. And it's obviously the downside, And the market is confirming this because we have opened at 108.88. And now we are in the 60s, we got to 58, so we already dropped 30 pips from the open, and it's still, Europe did not open yet, it's just opening right now for some countries. London is not open yet. So even this early in the day, we do have a drop of 30 pips from the open, and we still have the whole day in front of us. Now, after taking the opinion of the daily chart, now let us move down to the 4-hour chart. This trend line does not make a lot of sense to me. I mean, it's an okay trend line, but I would love it more if it was touched more, attempted to be broken more, if it was closer to the price action more, because as you can see, it is touched and then the price is completely away from this trend line, and then again touched and then completely away from it. Maybe here it looks a little bit better on the hourly chart than it did on the daily chart. And in all cases, we need to watch this trend line. It's currently around 107.90, but it's a rising trend line. With every hour, it's going to move higher just a little bit. Another thing that I really want to use is the retracement level for this last part of this recovery attempt. And I need to change the color here so we don't get mixed up with other retracements. No, this is too light. Yeah, maybe Okay, so I want to see the 38.2, the 50, 61.8. As you can see, the 38.2 is very close to this daily low, the daily low of October 22nd from last week. The Fibonacci level is 108.21. The daily low is 108.22. So obviously we have something in the 108.20s. And this is the support that we need to care about. If you are selling, and now as you can see, the price is trying to trade below the moving average band. Once it starts showing us that it is really trading below this moving average area here, that justifies a shorting position. In fact, yesterday's daily close by itself justifies a short position. Okay, and if we open a short position, what we need to care about is the 820s, the 821, 22. This is a support that I really recommend watching. Once we do break below it, we need to shift our attention to the 50% level at 107.88, and as you can see, it is currently extremely close to the rising trend line. But of course, with time, this trend line is going to be a little bit higher. Even if it's a difference of 5, 7, 8 pips between them, that means that they should be treated as one area, and they should be focused on. And once we break them, that gives more power to the short side of the market, to the bearish expectations. Okay, below this trend line, a visit to the 107.50s will be extremely expected. We have 55 here, 107.55, and after that, maybe if we can break below this support, I think that visiting this low will be also very highly expected. Okay guys, so this is for the downside. All we need now is to see the price closing this hour, probably closing. Oh, this is a 4-hour chart. Let me see, where is the price? Oh, well, it is below the moving average. It did break below it, so it should be expected to go further to the downside from these levels. And of course, we need to focus on these three levels, guys. Keep them in your mind: the 820s, 790, and 750s. Okay, now what if we are wrong? What if we sell here and the price starts moving higher? Or what if we do not believe it's going to fall? I'm sure some of you agree that the dollar yen is going down, some of you do not. So if you do not, and you don't want to get in the market here, you want to see what bullish possibilities there is for the day. Well, I honestly believe that it is not justified to buy the yen before breaking the 109.30s. I really believe so. But if I want to take your side for a minute and try to find a reason to long the yen against my view, against my expectation, of course, then I will calculate the retracement levels for the drop from yesterday's Fed high, and I will also try to find a trend line. How about this one? I think it looks great. It looks great because it connects to intraday highs and with a close here. You know, I do have a shadow, but it is only a shadow above it. It's a rather long shadow, longer than what we want to see, but it is only a shadow. So in my own opinion, without breaking this trend line, it would be, I don't know, you would be pushing the market to move towards your expectations. And of course, the market does not give any, I'm not going to use bad words, but it does not care about your expectations or mine. You know, the market moves as it wishes. So we cannot force the market to move in the direction we are expecting. However, if we break above the 50% level here at 108.92 and above this trend line, sorry about that, I'm gonna delete the other two levels. If we break above 108.92. That may be an early signal that we are going to challenge 109.30s again, and maybe this time we're going to break above 109.30s. So yeah, even if you want to be long, please do not be long. I don't recommend the long. Let me make it perfectly clear. What I recommend is a short, and I believe that shorting here makes sense. Once we start trading below 108.20s and 107.88, that would be fantastic for your short position. And you should, of course, update your stop level and risk management procedures accordingly. But if you don't want to follow this advice, which I recommend, and you think that this thing is going higher, although we had a rate cut on the dollar yesterday, which makes it a little bit hard to believe, but of course it's a market, anything can happen. Please do not go long before breaking 108.92. And I really prefer it if you even wait more than that and wait for a break of 109.37. I think 37 was the Fibonacci level, or 38, something like that. And without a clear and clean break above that, I really do not recommend a long position on this thing. But if we do break this level, the 108.92 and the 930s, then trading above 110 would become extremely probable, highly probable. Let's look for a target above the 61.8. To me, it's very easy. I used the 71.4, and the 71.4 is at, as you can see here, at 10.16. So if you go long and if things go well for you, we break 108.92, we break 109.30s, I recommend a limit at 10.16. But overall, I am bearish on this pair. So I hope that answered your question, Rui. I hope now you can go back to the chart, take a look at the dollar yen, and find all these important levels that we have been talking about and build a trading strategy accordingly. So to me, I'm going to short, guys. I am not waiting. I am going to short here, dollar yen, with a stop. It needs to be above 109.37, so it's 109.57, almost 100 pips. And the limit in this case, of course, should be to make me feel good about this position. I need a limit that is as large as the stop, at least, or a little bit more. 107.50s, how about that? 107.54, that makes 4, sorry. Yeah. And we are in, guys. Okay, so we are now having our first trade of the day, a short dollar yen at current prices. Okay, what else? Don't feel shy. Ask me for anything you want. Now, if you don't have something that you really want to look into, I do. Okay. Yesterday, when we talked about the euro, we talked about the Aussie. One of you guys requested the Aussie, and we analyzed the Aussie, and we found an important resistance area just below 69. Remember? These are the lines from yesterday. We used them to analyze, and I found this area between 82, I think, and 95. It was between 82 and 95, and I recommended along once we trade 10 pips above that, which we recommended buying at 69.05. Now, if you have followed that recommendation, this position would have been in a little bit of profit, 16, 17 pips of profit at the moment. And I wish you the best if you did. So your target, of course, should be the next retracement level, which is in the 69.80s. 69.83 should be your limit if you did buy, as we recommended yesterday, at 69.05. If you did not, well, we are so close to it. We cannot say that we are very far. So maybe a little bit of a retreat can give you a chance to get in the market on the long side, or maybe breaking above the highest price we saw overnight, which is 69.30. So breaking 69.30 confirms the strength, confirms that the buy at 69.05 was a good decision, and of course we can get in at that time. And if we dropped to levels close to 69.05 at the same time, that is the same thing that we can do here, and that is of course to go long. So if we got closer to the 69, that's a long. If we start trading above 69.30, that's a long. That's a confirmation for the long position that we recommended yesterday. If you have a position open, your limit should be 69.83. But what about the stop? We need to update the stop. If we have enough reason, of course, we need to update the stop. Now, with this break, I really believe that going back below this area here between the 80s and the 90s is enough and should be enough for us to close our position. You may use also a trend line from the lowest price seen this week up, and as you can see, this trend line is now a little bit below, not just a little bit, almost 25 to 30 pips below the bottom of this area, and that is why, of course, we need to respect this as well. So for the time being, let's just keep our stop not only below this support area, but also below the rising trend line. The rising trend line is currently running at 68.53, and as I told you before, the number of pips depends on how volatile the instrument you're working with is. If I see this trend line on gold, I may place my stop 40 pips below it. But if I see it on the Aussie, 15 pips are enough. So 53 minus 15, that is 38, 68, 38. That's going to be my stop for now. So let me remind you. We have a long at 69.05. Our stop is right now 68.38, and our limit is 69.83. Okay, now what I want you to do, if you are in the market, if you have a long position and you build that position on the recommendation given in yesterday's session, what I want you to do is this. I want you to keep updating your stop. Eventually, I want to see it on profit. Okay, and that can be done once we start trading above 69.30. If we do, I think we should move it a little bit higher. And of course, we are depending on this trend line as well. And this trend line is moving to the upside. That's why we need to update our stop level to the upside with the trend line, of course. As the trend line goes higher, our stop should go higher, but it's only a pip or so every hour, so you don't have to go every hour and update it. Just let's say in the evening and in the morning, as long as you are keeping this position. Once in the morning, you see, you take a look at the chart, you see where this trend line is running, and you update your stop. Just make the loss in the stop loss a little smaller, a little less every now and then. And eventually, of course, I would love to see it above the entry point 69.05. So if after trading above 30, if we reach 40, 50, you want to place it at 69.15, for example, at 10 pips of profit, that would be a wise thing to do, because always keep updating your stop level when you have a good trade. When you have a good trade, like this one is in profit. Of course, it's not a lot of profit because this is not an instrument that moves a lot usually. You know, the daily range here is limited. It's not like gold or oil or pound yen or these things that really move. On the Aussie dollar, you know, the daily range is limited, the moves are limited, and that's why the stop and limit, when they reach 100, that's, whoa, that is a lot. You know, usually they are half that or something like that. So please keep updating the stop and the limit. And no, the limit, we don't need to update it unless you really believe in this position. You want to use a better limit than ours, it's okay, as long as you use good risk management. This is the key. Use good risk management. Okay, guys? So, good luck for you guys, all and everybody who bought the Aussie dollar on our recommendation yesterday. And now let us move to another thing. A currency that we have not taken a look at for a few days is the neighbor of the Aussie, and that is, of course, the Kiwi. As you can see, whoa, this is a very nice move. This is a fantastic move. We have not talked about it for a few days. Last week we did, or in the last webinar series we did a couple of weeks ago, but this week we are talking about it for the first time. As usual, my advice to you guys is to start with the daily chart. Look for a candle or a bar that can tell you, where the market is going. Well, this is good. This is very good. As you can see, guys, we have been trying to recover almost all month. In the beginning of the month, early in the month, we have reached a low. Like a lot of the things, you know, the dollar-related instruments, they dropped to a low against the dollar early this month, and then they started recovering. This applies to a lot of things like the euro, and New Zealand dollar, as you can see here, and other instruments. Now, what is really important to me is that we have broken, let me use the word broken, or crossed if you prefer. We have crossed above the moving average band around 2 weeks ago. Okay, we dropped a little bit, and then we saw 3 good days for the Kiwi, pushing the price above my moving average band. Of course, you know that I use the 49 and the 35 simple moving averages. Above here, we have seen a top at, let me see what price it was, 64.36. From there we dropped again, and the important thing here after this drop is that we found support around the moving average, or to be specific, we found support exactly inside the moving average band, which is, of course, I can hear you say, bullish? Yes, you are right. If you said it is a bullish thing, of course it's a bullish thing. We have seen the price here finding support inside. Let me make it more clear for you. Inside the area, just above it, inside the area, and then boom, of course with the help of the Fed and the dollar rate cut, boom to the upside. But this boom that we have seen in the past 12 hours or so is not breaking above the previous top seen early this month, or the area which stopped the price from recovering further in September. So October 22nd high is 64.36. In September we have daily highs between 64.51 and 64.40. So in these 11 pips We do have a lot of things happening in September, and this 4 pips below it, below the bottom of this area, we have the high for October. So within 15 pips, okay, between 36 and 51, we do have a resistance that we really need to care about. Peter, how are you, Peter? Thank you very much for your kind words, buddy. I really hope that you are enjoying and getting informations that you can use on your trading platform, on your real account. So come join us, buddy. Open your real account and let's start trading. Hamoud, thank you very much for being here, buddy. Welcome. If you have any question, please let me know. So you guys, we obviously have a resistance between 64.35 and 36 and 64.51. In these 15 pips, I would really put my attention here in these 15 pips. If I want to trade the New Zealand dollar, I'm going to really pay attention for what the price is going to do inside this area. We are approaching 36, I think. The high is 33. Up until now, the daily high is 33, guys. And we have a resistance area that starts at 36. Okay, so we are there. We need to keep our eyes open. What I really want to see to justify a long position, of course, this observation by itself is enough, but now we are a little bit far away from this area, so we cannot build a position here depending on what happened a few days ago. Of course, it's a bullish observation, but I need another bullish observation for today to justify the long position. Okay, now it is very simple. All I need to see is the price breaking above this resistance area. So if this resistance area is broken, then a long is justified. The top of this resistance area is at 51, and the most recent, or this month's high, is at 36. So it is really personal here. To some people, the thing to do is to wait for the price to break above 51, while to others it's enough to break above 36. Why? Because this is the current month high. This is the closest top to the current price level, and once we start trading above it, that's it. So, and I really believe so, especially with the rate cut, of course, the dollar rate cut. That's why I'm going to give you this recommendation, guy. 36 added to 10 pips for a break, that's 46. So we have a buy at 64.46. If we reach that high, then the market will be expected to continue moving to the upside. Where do we have our stop? Unfortunately, we cannot have a very tight stop, but we are going to try. So let me place this here for the moment, and let me switch to the hourly chart. Hopefully, you know, after such a sharp move, it's very hard to have a tight stop. So what I'm going to do, first of all, is that I'm going to draw the retracements for this very impressive move seen in the past 12-13 hours. And as you can see, this 61.8 level is very close, or actually currently inside the moving average band. But of course, the moving average band is going to change. You know, with time, it's going to change. It's going to probably move to the upside after this rising move. So you need to watch these two moving averages. For if they reach the 50% level, then you can place your stop below the 50% level. But at the time being, they are around the 61.8. That's why I'm going to place my stop below the 61.8, and that is what it is, 63.70. with such an instrument that is not really volatile. In my own opinion, 15 pips are enough, so 63.55. So buy at, sorry. Unfortunately, as I said, it was obvious even before taking a look at the chart. That's not going to be a very tight stop, so 63.55. And to tell you the truth, this usually happens the next day after the Fed. You know, of course, because we have strong moves on the Fed. And then if you want to get in the market on the next day, then you really have to deal with that. You know, it's a Fed day, the market has moved in a sharp way, and you cannot expect to place very tight stops. But you have, of course, you have another option, and that is, of course, to skip the day after the Fed if you don't want to trade. It's fine. Of course, it's always fine to take a break, especially when you feel that there is more risk in the market than you are willing to handle. What about the limit? Let me see. What about the limit? In my own opinion, once we start trading above 51, then the price will be expected to move higher, and in this case it can stop here because, as you can see, we have a couple of bottoms in the 80s, I think 80s or something like that. Yes, this bottom is 87, but if we calculate the retracement levels, that would be better. We have 64.97, but with this kind of stop, of course 64.97 makes sense, but with this kind of stop, I really think that we should aim higher, and especially that we will be breaking, if we get in this position, we will be breaking an important resistance area that stopped the price for 2 months. So when you break such important resistance areas, what is expected is, of course, for the price to move significantly higher, not just 30 or 50 or 50 or 40, 50 pips, something like that. And that's why I really believe that it's capable of reaching the 61.8 level at 65.67. Okay guys, so this is my recommendation for the New Zealand dollar for today. Now, also because of the very sharp move that we have seen yesterday after the Fed, I think that selling here does not make a lot of sense unless we test this area and fail. And when we test the area resistance area, we'll be talking about 64.36 to 64.51. And we fail, then that can be justified. But we need some kind of a bearish signal in order to do so. A bearish candle, a break of an intraday trend line to the downside, and so on. I will not recommend a short position here. But if you are looking for a short, let's move down to the hourly chart. Honestly, it is very hard to recommend short here, but of course I know human nature. I know this, and I've seen this many times throughout the years. When something is moving to the upside, we're humans, we love to bargain. This is in our nature. So when something is moving to the upside, although the market is telling you that it is moving to the upside, what you find yourself doing, and this can happen to anybody, if you have been in the market for a day or for 20 years, it can happen to you. But of course, with time, you can manage these emotions and start controlling them, of course. But it can happen to anybody. When you see the price rise and the market is telling you that it's moving to the upside, what you prefer to do is to find a good price to sell, to move against the direction of the market. Why do we do this? Because we're humans. We love to bargain. Something that was at 63 cents yesterday, like New Zealand dollar, and today it's above 64. You say to yourself, well, this is a good price to sell. It was 63 yesterday. Why not take a short position here? And when you think like this, you are neglecting the fact that the market is moving to the upside. It is telling you that it's moving to the upside. It was at 63 yesterday and 64 today. This thing is going to the upside. This is how you should be thinking, not the other way around. So guys, we are expecting, of course, a move to the upside, but I'm going to try and play, the defense for a drop here. And I honestly can't find a reason to sell unless you think that, well, this is a move, this is a strong move, let it retrace 50%, 38% of it, and then maybe it will rise again. Yeah, of course that can happen. But look at this. Currently we are at 64, 18, 19, something like that. And the 38.2 is at 63.94. Of course, with the spread and with the time you need to get in and out, you may not get the right price that you want to get in and out because it's a market, it moves fast. Sometimes we get the price we like, sometimes it's a couple of pips, a few pips away from it. So what are you trying to do here? Where you're trying to sell at 64.20 and you want to close your position at 63.94, making 25 pips. But you will be positioning yourself against this previous move, which obviously shows strength. Instead, of course, if you try that, that can work. But what if the trend and the previous move starts accelerating again while you have a short position? Then you will lose twice. And when I say this to my trainees, they wonder, why are you telling us that we're going to lose twice? We're going to lose once. I place a stop. And if the market starts moving to the upside, then I will lose this position. And it's okay, my stop will be hit. It's okay, that's the end of it. But yeah, you are right. But there's another loss that you are not aware of. This is an opportunity to go long. And by positioning yourself against it, you are not only losing the stop loss on your short position, you are also losing the opportunity to make money on the long position. So yeah, instead of making 25 pips or 30 or 40 pips, whatever, you are first of all losing 25 or 30 or 40 pips depending on where you place your stop, and you are losing the opportunity to make a profit of 30, 40 pips. So you are losing twice, not once. Okay, guys? However, there is something, of course, that can justify short position. Of course, as we said many times, there should be a point where you admit that you are wrong. And in this case, it is the stop of the long position. But it's not very close. It is around more than 50 pips down from here. I think, yeah, more than 50 pips. We talked about 63.70 as the Fibonacci 61.8 for the rising move from yesterday's low, and at the same time the moving average band is very close to it. Or actually, what I mean is the Fibonacci level is inside currently at the time being. It is inside the moving average band. If this level is broken to the downside, then a short position becomes justified. Is this expected to happen? Of course not. But can it happen? Of course, yes. It's a market. It can do whatever it wants. So although it's not my recommendation, I am going to imagine a situation where a short position is justified, and I'm gonna place it here. Sell at 15 pips below the Fibonacci level. That leaves us at 63.55. The stop should be above this high, and of course we have the 30s as a resistance. Today's high is 33. The area of resistance starts at 36, so we need to place our stop above that. Actually, it reaches up to 51, so you may need to use a stop above 51, and 15 pips above 51 is of course 66. That leaves you with 110 pips of a stop. But it's okay if you want to do it. It's okay. You maybe when you see this kind of stop, of course, we have a solution for that. If you really want to trade and technical analysis telling you that your stop is more than 100 pips or 150, what you need to do is you need to, and I have said this before, of course, you need to lower your trading size in order to make the dollar value of these 120, 150 pips less than what they usually are, to make them closer to a loss of 70 pips is. So for example, if you usually get in the market with one lot, then you can use this recommendation and get in the market with half a lot. And if you do so, 111 pips will be equal to a loss of only 55 pips on a full lot trade. It's something that I sometimes do, but you know, you only do this when you really have to, and when you really want to trade. Okay, guys. So I'm going to check your comments before we take our break, but the last thing that we are going to do here is the limit for this recommendation that I don't recommend. Have you ever heard this before? It's a recommendation that I don't recommend. Of course, I prefer the long position on the New Zealand dollar for today, the one that we have just talked about, but I always like to put myself against my beliefs, my ideas. I like to challenge my ideas, and I'm not just talking about the market. If I really believe in something, sometimes I look online for information against what I believe in. So it's a great way to keep some kind of balance in your thinking, and it is really needed when you are trading the financial markets. It's great in general in life, and as a trader, of course, that makes a great practice. This is what I tell my trainees. I tell them always try to find reasons on the chart against what you believe in. I believe the euro is going up, but if I see some signs that makes me worried, I will be, of course, careful and cautious. If I see signs that the euro is not going up, it's not going higher, then I would really look at these signs and include them in my trading strategy. That, of course, leaves me with a more cautious trading. It leaves me with trying to, for example, close my profit when I have a profit, not being too greedy, not waiting for 200 pips or something like that. If I get 40 pips and I see a weakness sign, although at the beginning I will be expecting more than 100 pips, but if I see a weakness sign around 50, 60 pips of profit, I would say to myself, that's it, buddy, that's it. Close your position and get out of the market. So where is the limit? The last thing that we're going to talk about before the second break for today, where is the limit? The limit, of course, should be below this area. This is a strong support area. It's obviously strong. Look at all these bottoms here in the recent trading days, and if we do break below this area, I think the next retracement level just below this area would make a very good, and as you can see, this is why it is a strong area. It is the 50%, guys. It is the 50% retracement level at 63.37. What is the next retracement? It is the 63.14. So no, that's not a lot of profit, and as you can see, because it's just short position, it's not the recommended position. Even when you try to find lower levels, you are not aiming for much. 63.14, that's not a lot of profit, and that's why it's not recommended. Even if we get below that, let's try 78.6, 88.6. Let's see where are these levels. You can of course use these levels. This one looks very interesting, the 60 to 80. So this is the best I can do for you guys, 60 to 80. The guys who like to short this thing, I cannot promise you more than this. And as you can see, the stop is above 100 while the limit is at 75 pips. The limit is smaller than the stop, and that is not a perfect situation to be in, but it's what you get when you are trying to sell after such sharp and interesting moves to the upside like this one. So with this, guys, I leave you. Let me remind you that this is not my favorite trading position. My favorite trading position is buying at 64.46 and aiming for higher levels. Okay, but of course I always try to present the view of the two sides of the market. With this, we come to the end of this hour. Ram Heinz, I'm very happy that you made some profit on the dollar yen. That's great, buddy. That's fantastic. Keep it up. And for now, I think that you can add to these pips that you have made 67 pips of profit. Fantastic. That is fantastic. I'm sure you were long because during the night we have traded higher around 109.30, so you must be long from the previous sessions. But now it is time to switch after failing to break above the 109.30s. I think it's time to switch teams and change to the bears. So come join us, the bears, and I really hope that you will make some money again with us. And guys, as I have said, I am going to leave you for a break, for a very short break. And before I go, I want to remind you that this webinar is sponsored by QTime FX, our favorite broker, a leverage of 500 to 1, the lowest forex spread broker of 2018, and you can see why. 0.4 pips on the euro dollar and the dollar yen with no commission, and we are giving you $500 of a bonus, withdrawable bonus, when you open your account. So please contact us at fx_educast via Telegram, and let's open this account for you. Okay, guys, so I'm going to be leaving you for 5 minutes, and then we will come back to discuss more instruments. One of the instruments that we'll be talking about is, of course, gold. Gold, when the Fed is making the move, gold is making a move too. So it's going to be exciting to take a look at gold after the break. Stay tuned, guys, and see you in 5. Hello guys, welcome again. Everybody who's with us, welcome again after our last break for the day. We have talked about a number of instruments, and of course we're going to continue talking about more instruments. Of course, with the Fed move yesterday, I think one of the things that we really need to care about and to talk about is, of course, gold. So let's move to our trading. Sorry, I'm trying to look at the chat, see if you guys have any requests, and at the same time I'm looking at the chart. So chat and chart only with one letter difference between them. Let us now take a look at gold, and gold is, as you can see, it's moving higher and higher, and it is, as we speak, it is at the 50% level for this move. Do we still use this move? This is a question, because we had this. This move was F5 to the downside, and that's why I believed that the gold is going to drop. But of course, after a 5 to the downside, we do have some kind of correction. Sorry about that. We'll fix that. So this is the 5-wave sequence that I really believed in. Let me clear everything else on the chart. I just want you to wave count. This is the 5-wave move from, you remember, if you were in the market on Friday, you remember Friday was a good day for me. I made some profit selling gold, and here it is. This is my best trade this month so far. It was a short gold position Friday, and after the 5 waves to the downside, of course, what should follow is a 3 to the upside if we are counting the wave correctly. This is A. This can be B. Of course, if you know your Elliott, you know that B can travel beyond the extreme or the termination point of the 5-wave sequence in a flat correction, or in several types of correction, compound corrections or complex corrections. So we still can count this as 5, 3, but one of the things that really support this idea, that I really like, is that when you calculate the retracement levels for this move and not this move, you get a very accurate, and this move, of course, why I'm calculating this, I'm going to explain in a minute, but this gives you a very accurate test of the 50% level that we have seen in the past couple of hours. The last two candles are the last couple of hours are, they were very close to 50% level. And of course, this means that we should really pay attention to this level, the $1,500 and let's 70 cents, okay? We don't want to get down to the single cent, that's a lot. So 1500.7, this will be our initial resistance for the day. If we break above this level, gold will be expected to continue moving higher. Of course, gold, and in the beginning, gold dropped, and that was because the language of the statement has changed, which to some people or some participants in the market meant that the Fed is ready to move either way. It can raise rates next time. This is what some people understood from the statement, but when asked about it in the press conference, Chairman Powell repeated the same things that he said last time, that the bottom line is that they are going to keep monitoring the economy, and if needed, they're going to cut the rates, or if they find a reason to raise rates, they're going to do so. But the thing that he said, which of course after a great move for the gold bears like myself, the thing that he said that changed all this direction of the market. Let me show you just how sharp the reversal was on a shorter scale. Yeah, look at this drop. This was very nice to me. I liked it very much, and then this happened. This part is a little bit against my expectation, because of course you need to see some kind of correction after a drop. So the thing that he said and changed things, unfortunately for anybody who's gold short, is that the probability of raising rates is not very strong, and it needs a good inflation, which is not happening. This is what he said. So the inflation numbers make it very hard for the Fed to raise rates, and that of course benefited gold. Now, as you can see, we do have this resistance. We want to watch this resistance. I'm really interested in it. And let me switch back to the hourly chart. As long as we do not break 1500.7 in a clear and clean way, the price can start falling anytime. But if we do, then it will be expected to continue moving to the upside. This is the resistance that we are talking about today, and that can lead to 1504.7, 40 pips between the two, and above that, of course, we have the top of wave 2. The top of wave 2 is around 1508.4, something like that. Let me check. Or 0.2, $1,508.20. Okay, one of the observations that I really want you to take note of is that the termination of wave A is very close to the termination of termination point of wave 4, and this is something that we use to make sure that the count is valid and it satisfies the guidelines of the wave principle. So sometimes the whole correction terminates around the top or the termination point of wave 4, and sometimes only wave A terminates around that level. In that case, of course, we need to look for other targets for the correction. If the whole ABC ended around 4, around the top of wave 4, that would be fantastic. But and of course that would be fantastic for the bears. This is what I mean. But once we only terminate a wave here, which is wave A, one of the 3 waves of the correction, this means that wave C can go higher, much higher than that, of course, to the 50% level or 61.8 level. And I really hope that we stop at the 50% level and start falling again. But of course, if we do not, then the price will be expected to move higher again. Now, if we break above 1507, let me give you a recommendation. 20 pips above that, plus some spread, 1507, that means 1503. This is where I want to buy. Okay, buy at 1503. If I do not reach that level, I do not recommend a long position. Okay, and with that, of course, let's see. You know, the top of wave 2 can be a good target for this one. I'm trying to keep my limit and stop as small as possible for today. So, because you know it is going to be it is the day after the Fed, and of course, risk can higher than usual on the day after the Fed. That's why I don't want to trade gold today with stops of 90 or 95 or 100 pips, which are usually okay for me personally. But today I want to keep my limit and stop less than that. So my limit will be the top of wave 2, which is 1508.2. That leaves me with 52 pips of profit if my limit is hit. Now I want my stop to reflect this carefulness. You know, I don't want to use a large stop. So once we reach 1503 and we are in, I believe that below 96, that's not even what I really want. We can use the same level and calculate a good number of pips below this level and place our stop there. Or we can use this top or this bottom. So to keep it limited, to keep my limited, I am going to use the closing price for this candle. If it fits, it's 97.1. If we take 20 pips out of that, 95.1, that is 79 pips. I still want it to be less than that, so I'm going to be using this top here with 20 pips below it. The top, the overnight low was 99.6, so 20 pips below that, 97.6. Yeah, this is my stop. So this is a very small trade for today with limited stop and limited limit. I like that. So we have 52 pips of profit if our limit is hit. We have 54 pips of loss if our stop is hit. Numbers that we can deal with in such a day, the day after the Fed, where risk is not as it is on other days. This is the recommendation for now, guys, but this is not my main view. So yes, this is a recommendation. This is what can happen if it's against my expectations. But from where I stand, I really believe that the 50% level has a chance, and I want to take a look at the indicators to see if that is possible. The MACD is not giving me anything here. No crosses, it's not overbought or oversold, it's not extreme, it's not crossing anything or even the zero line. The stochastic has been flat for a number of hours, which is not helpful. The RSI is approaching and this is what I really want to see. Yeah, I want to take these two out of the picture, and I want to keep only the RSI. Yeah. So guys, as you can see, we are approaching the overbought, and because we are approaching the overbought, we might have a chance for a short position here, especially that we are standing at the 50% level for the 5-wave sequence, and especially that A and 4 are very close to each other at the top of wave A, top of wave 4, confirming that this could indeed be a valid wave count. And one more thing, the daily low for October 25th from last week is 1500.2. Our 50% level is 1500.66. That's 4.6 pips apart. So we do have something here. And of course, we have the psychological level of the $1,500. So all in all, we can get pushed to the downside from this level, given that we do not break above 1500.66, the 50% level. What would be the first sign of that happening? I need to go to the intraday chart to see if that is happening. And of course, if we draw a trend line here, it's not going to make a lot of sense. So just breaking below this trend line by itself does not mean a lot to me as a technical analyst. But I noticed that we have the moving average band just before this trend line, and this trend line is 9.4, moving average band at the bottom of the band is around 98.2. They are 12 pips apart. So if we start trading below the moving average, that would be a good thing for the bears. And as you can see, we have on the intraday chart, we have been inside the overbought area, and now we are starting to get out of that area back to the normal levels again. So in my own opinion, if we start trading below this moving average, which is now at 98.2, then that justifies a short position. 98.2 98.2 minus what? 15 pips, let's say 96.7, or even 10 pips. I'm going to use 10 pips. Why? Because by the time we are trading below this moving average, we will be already trading below the trend line that we are not really convinced of, but we're going to use, and the moving average. So 98.2, 97.2 in my own opinion, this is enough. This, if we got there, that shows you that the price on the intraday chart has been trading below a rising trend line and a moving average, and that's a short setup. Now, what about the stop? Of course, our stop needs to be at 1503, the entry for the buy level, and our limit here also we don't want 100 pips or so on the limit. So in my own opinion, if we calculate retracement recovery from the low seen last night, that could be enough. The 50% level is at 90.80, and that is why I'm going to place my limit at 90.80. 90.8. Of course, that leaves me with 64 pips of profit if my limit is done, while at the same time 58 pips of a loss if my stop is done. That sounds reasonable, not a lot of risk, and not a very far away limit that leaves me feeling greedy, wanting 200 pips of profit. No. For today, we are not doing that. We are sticking to limited stops and limited limits on gold specifically, because gold is really related to changes in monetary policy in the United States and the Fed decisions. So this is my favorite position on gold for today. I'm going to keep it here on the screen so you guys can see it. And a short at 1497.2. My stop is 1503. My limit is 1490.8. Keep these numbers with you for the day, and if we get to this entry level, initiate a short position with a reasonable stop, as obviously illustrated in front of you at 1503, and a limit at 1490.8. Okay, so this is it for gold. What about the long term? I really want to take a look at the long-term gold analysis with you guys. I'm going to keep this chart as is in case we need to go back to it. So I'm going to use another chart for the analysis of, let's forget about the kiwi. Okay. the long-term chart. For the long term, of course, we need to look at the daily, at least the daily. And it has been a great year for gold. We are up more than $200 per ounce since the beginning of the year. But the important question is what's next? I would really like to take a look at the weekly. I want to know, guys.